Greetings. I am speaking to you from New Jersey, and today we're going to talk about inflation. I think this is a very important topic because inflation numbers and inflation rates have been surging and rising across the world recently, and it's something that you should be aware of and something that you should take action against to protect yourself from inflation. So in today's video, we're going to talk about the inflation problem and whether it is a problem and also how big of a problem it is. And we're also going to talk about what you should do to protect yourself from inflation. So make sure you watch until the end. So ever since the pandemic, governments have been dealing with a lot of economic problems because of a lot of government measures to stem the tide of the pandemic. For example, lockdowns, shutting down businesses, stay-at-home orders, etc. A lot of businesses have shut down or have suffered a lot because of being forced to shut down and also because of decreased demand, because people are being told to stay home. They can't visit a lot of businesses that they usually visit, like restaurants, bars, theaters, etc. And the hotel industry and the tourism industry in particular have suffered a lot because of less travel and less tourism. And a lot of businesses related to the tourism industry have suffered a lot in particular. But also a lot of businesses in general because of the economic downturn and people losing their jobs and having to spend less because of losing their jobs and having less money. So because of this, governments have been addressing economic problems by printing a lot of money and funding economic programs. There's a lot of unemployment stimulus in the past 2 years or past year ever since the pandemic. And there has been a lot of other government-funded programs. But since so many governments are already in debt at the beginning of the pandemic and actually before the pandemic, governments have been responding by printing a lot of money. And this has caused inflation problems that you should be aware about. Let's look at this chart from the Federal Reserve. And this chart is a chart of the US money supply. So M1 is the measure for the money supply, and it's the most specific measure because it only includes the most liquid types of money like cash and checking deposits. So at the start of 2020, the US money supply was at $4 trillion. And in less than 2 years, now it is about $20 trillion. And that is an insane increase in less than 2 years. Now at 2021, we have 5 times the money supply as we did at the start of 2020. And that is just a crazy amount of increase in the money supply. And you can see how this can be a big problem when it comes to inflation. So let's look at this chart for just the past 10 years. It's the same chart on the money supply, but just for the past 10 years to give you a closer look at how much the money supply has really increased in only 1.5 years. For those who say that M1 is too narrow of a measure of the money supply, let's look at M2, which is the measure of the money supply that also includes less liquid assets, which are also called near money. So in addition to everything that makes up M1, M2 also includes savings deposits, money market securities, mutual funds, and other time deposits. If you look at the chart of M2 from the Federal Reserve, at the start of 2020, there was less than $16 trillion in the M2 money supply. Now there is over $20 trillion in the M2 money supply. This is a huge increase. It is a 25% increase, more than 25% increase in less than 2 years, which is huge. And that means that if you just look at M2, 20% of our entire money supply was created in the past 2 years, ever since the pandemic. And that is crazy. Let's look at the chart for just the past 10 years for M2 to give you a closer look at how much the money supply has really increased, whether you look at M2 or M1. And before you think that this is just an American problem, you should look at the money printing and the inflation going on in the rest of the world. Because the pandemic has affected the whole world, a lot of countries are reacting in a similar way to the United States, which is to print a lot of money to fund government programs to address the problems during the pandemic and the economic downturn during this pandemic. So if you look at the rest of the world, a lot of countries are printing a lot of money and there is a lot of inflation. For example, in Turkey, the food prices rose over 20%. And in Brazil, they experienced the largest monthly inflation since 2003. So this is not just an American problem, this is a worldwide problem because a lot of countries are printing money to address the economic downturn during the pandemic. And also, the US dollar is the world reserve currency. Because a lot of countries hold US dollars in their reserves and a lot of countries also peg their currencies to the US dollar, and inflation for the US dollar will affect these countries, which creates a global impact. This money printing has already caused inflation. If we look at the latest data we can see we have a 5.4% inflation rate in the United States, which is a lot. And if we look at the direct report from the Bureau of Labor Statistics, we can see that gasoline prices rose 42.1%, prices for new vehicles rose 8.7%, for used vehicles that was 24.4%, prices for electricity rose 5.2%, meat prices rose 12.6%, furniture prices rose 11.2%, appliances 7.1%, sporting goods 7.5%, and car and truck rentals 42.9%. Inflation is a problem. When you're printing money, that leads to inflation, and that's just basic economics. When you have more money chasing the same amount of goods, then your money will be worth less and your purchasing power goes down. But in fact, we actually have a smaller amount of goods because of the economic downturn. So we have an increase in the money supply, more money chasing a smaller amount of goods. That means your purchasing power goes down even more, and we have more inflation and a depreciation in your purchasing power and the value of the money you have. So this means that your money will become less valuable, less reliable, and less trusted. Now that we have established that inflation is a problem and it could be an even bigger problem in the future, let's talk about what you can do to protect yourself from inflation and, if possible, even profit from inflation. So we're going to talk about 7 things you can invest in to hedge against inflation. And make sure you stay until the end because I'm going to save the best hedges against inflation for last. The first one that I'm going to talk about is real estate. So real estate prices and real estate rents rise with inflation. When prices in general go up, real estate usually goes up with it. So when you invest in real estate, your money, the value you put into the real estate, will grow with inflation. And if you don't have a lot of money to buy whole real estate properties, you can always buy REITs, or real estate investment trusts, which are stocks of real estate companies that operate revenue generating real estate. So that is another option, and like I said before, property prices will rise and rental prices will rise with inflation, so that's a way to protect yourself. The main drawback with investing in real estate when it comes to profiting from real estate is the taxes. You have property taxes, you have dividend taxes if you're buying REITs, because when the REITs get income from the rental properties and they distribute it to their investors, you get tax from your dividends. And another tax is just in general, you get taxes on rental income. So if you buy a whole real estate property and you rent it out, you will get taxed on your rental income. So those are the drawback taxes that make real estate investing less profitable. But with inflation, you will still be able to protect yourself if you make the right real estate investment decisions. The second thing you can invest in to protect yourself from inflation is commodities. So if you're not sure what a commodity is, commodities are basically goods that are
interchangeable and differentiable. They're basic goods like oil, metals, grain, etc. And because commodity prices rise with inflation, it's a good way to protect the value of your wealth by investing in commodities, because when inflation goes up, the commodity prices also go up. And there are two commodities in particular that you should invest in to hedge against inflation, but those are two really particular commodities that I will save for last because they are the best investments you can make for inflation. The third investment you can make to hedge against inflation is the stock market. And you can invest in individual stocks, or if you don't want to do so much research on specific companies, you can invest in index funds or ETFs, which is recommended for beginners in investing in the stock market. I think there's a caveat because right now a lot of stock prices are overvalued, but in general, when it comes to inflation, investing in the stock market is a good way to protect your wealth because your stocks won't necessarily depreciate because of inflation, while your cash will depreciate in value when inflation occurs. And some companies can actually benefit from inflation because of higher prices, especially companies that are less capital intensive because they don't suffer from higher costs due to inflation. But you should beware because these companies often have higher salaries for their employees and because they hire more talented people, and that could also affect their costs. But in general, less capital intensive companies can benefit from inflation. The fourth thing you can do to hedge against inflation is by investing in TIPS, which stands for Treasury Inflation Protected Securities. TIPS are basically a type of U.S. Treasury bond that are indexed to inflation, and their principal value changes with inflation. However, the drawback is when the principal value adjusts with inflation, that becomes taxable income and the change in value is taxable. So that's a major drawback. And I would also say that I think there are other investments that can give you a higher return. So I think this might sound great because it's indexed to inflation, but you might have higher returns with other investments. Now we're going to get into the last three hedges against inflation, and these three are what I believe the best hedges against inflation that you can make. And the first one of these is cryptocurrency. So cryptocurrencies are an alternative currency, and when your national currency is becoming devalued and less reliable, alternative currencies like Bitcoin and other cryptocurrencies become more attractive because it's an alternative currency that people can rely on when their national currency becomes less trustworthy. So there are mechanisms in place to protect against inflation when it comes to cryptocurrencies. They make it so that cryptocurrency mining is difficult and expensive so that you don't have to worry about an explosion in the money supply and rampant inflation with these cryptocurrencies. Whereas when it comes to government money and national currencies, there is an unlimited supply and you really have to trust the government to not explode the money supply. And unfortunately, that is not the case right now because of how much money is being printed by governments worldwide. Another investment you can make to hedge against inflation is gold. And gold is a go-to hedge against inflation that people have relied upon when there are problems with inflation in the economy, and that is because gold is also an alternative currency. And actually, it used to be the actual currency for many civilizations throughout history. And until World War I, there was a gold standard, and countries pegged their currencies to gold and promised to exchange the banknotes for gold, and basically gold was the currency. And there are reasons why that is. So gold is indestructible, it is rare, gold mining is difficult and expensive, which makes it resistant to inflation, and gold has inherent value whether or not you use it for currency. Whereas paper money doesn't really have inherent value outside using it for money, gold does have inherent value. It is beautiful, and like platinum and diamonds, it can be expensive in jewelry even when people are not using it as currency. And there is also a lot of commercial and industrial demand for gold. This inherent value makes gold valuable even if it's not used as currency, but even though we have left the gold standard, many countries still treat gold as an alternative currency, and that's why a lot of investors treat gold as an alternative currency. And to explain, countries, although they officially say that we have demonetized gold, they still hold a lot of gold reserves because gold has value inherently and can be used as an alternative currency, and people still see it that way. Governments and countries see it that way. That's why there are huge gold reserves held by central banks, and a lot of investors see it that way. Also, the purchasing power of gold is stable, and it even rises. If you compare the purchasing power of gold with the dollar, the purchasing power of gold is pretty consistent, while the purchasing power of the dollar decreases because of inflation. So the dollar value of gold rises consistently, and that's why it's such a good hedge against inflation, because it is so constant when it comes to its purchasing power with different commodities. You can protect yourself from inflation by investing in gold. And throughout the modern era, the dollar has always risen with gold, so it's a pretty reliable hedge against inflation. But the best hedge against inflation is platinum, which I saved for last. So platinum is 30 times rarer than gold, and it is beautiful as well, but it's too rare to be used as a currency. So like diamonds, platinum is rare and beautiful, and it's very valuable and expensive, but unlike gold, it's not common enough to be used as currency. So gold is rare, but not as rare as platinum and diamonds. Also, platinum is very robust. It has a lot of good properties like gold has, and it does have a lot of inherent value as well. Actually, it has even higher inherent value because of its beauty, of its rarity. It's even more valuable when it comes to jewelry. And there's also a lot of commercial and industrial demand for platinum. And this will rise even further because platinum is a resource that is essential to clean energy technology. So the demand for platinum will go up even higher in the future. Also, it's even more difficult and expensive to mine platinum than it is to mine gold. Mine production of platinum is 15 to 20 times scarcer than gold, which makes it even more resistant to inflation problems. Platinum also has higher densities and purities than gold, and that is why it is usually more expensive than gold, and jewelers usually value platinum over gold. Platinum tends to trade around 1.25 times the price of gold, but the thing is, and the beauty of this video is that right now, platinum is currently undervalued. Its price is lower than gold, and that is a huge opportunity for you to take advantage of. And that's why I think this is the best hedge against inflation. Because platinum is so valuable historically, and because it's such a valuable commodity and such a rare commodity, it's almost like diamonds. It's sort of another thing that jewelers value as well as diamonds. Platinum is a great investment. It should be worth more than gold, but currently its price is lower than gold. So take advantage of this lower price, invest in platinum, and hedge against inflation. Also, with the rise of clean energy, the demand and the price for platinum will increase even more. To rank the best investments you can make to hedge against inflation, I would say first is platinum, second is gold, third is cryptocurrency, fourth is real estate, fifth is other commodities, sixth is tips, and seventh is the stock market, just because a lot of stock prices are overvalued right now. So thank you for watching. I hope this helped, and I hope you're able to protect yourself against the inflation problem happening right now. Make sure to subscribe for more helpful content, and I'll see you guys in the next video.